Right, the topics that we're going to talk about, Bitcoin. Now, this is becoming harder and harder to ignore. It is up 138% since January, and the people in the audience, you may be wondering whether it's still a good time to invest in this asset or not, or perhaps what makes Bitcoin unique, or what gives it value. And next up, we will explore what is EPF's investment strategy. Last week, we talked about the retirement fund's projected payout is expected to range between 5.4 to 5.7%. This week, we'll dive deeper into what type of assets does EPF invest in and whether it is a good decision to follow EPF's investment strategy or not. So this and more in our weekly analysis, as usual, not financial or legal advice. And actually, the session tonight is really just a detailed summary of the discussion I had between two financial experts, Han Liu and Sunny Hamid, on Wednesday. So the topics that we talked about is really just about Bitcoin, why it's up so much since January, what gives it its value, why is it so volatile. And then after that, the second half of the session, we talked about EPF's projected payout for 2023. So now, on Wednesday in itself, I started off the session pretty broadly. I showed the speakers this chart and I said that, hey, this is the Bitcoin chart over here. It's up 138%, very impressive gain. And Bitcoin has rallied to a 19-month high of 39,600 yesterday. Okay, and it's currently retracing back to 39,400. This asset class has vastly outperformed other assets. Okay, take a look at gold. Gold's year-to-date gain is 12.67%, which by gold's standards is already considered very impressive. Okay, meanwhile, the S&P 500 increased by 20% within a similar time frame, and normally S&P is expected to gain 8 to 12% every year, so for it to have a 20% gain this year is also quite impressive. And finally, our FBM KLCI, the local market, nothing to shout about over here. It's down negative 2.20%. And one of the first, perhaps the biggest question that you may have is what makes Bitcoin unique? Well, the speaker said that Bitcoin is a digital settlement network. So think of it as Visa and MasterCard, except without a centralized entity. So Visa and MasterCard, let's just talk a bit about it. What gives these two companies value? Right? The value comes from its capability to facilitate cross-border transactions. Right? So Bitcoin works kind of in that way, except it does not have a third party to control or monitor everything. It's what we call a decentralized digital settlement network. Next, Bitcoin is also scarce. There's only 21 million coins that will ever be issued, and its issuance is decreasing exponentially every 4 years. So let's have a look at this chart over here, Bitcoin's issuance schedule. So in 2009, when Bitcoin was created, every 10 minutes, there are 50 new Bitcoins being mined. Okay, and now we are right here. Every 10 minutes, 6.25 BTC are being mined. And this will continue to decrease all the way until 2140, where Bitcoin hits its maximum supply of 21 million coins. So this in itself already gives Bitcoin inherent intrinsic value due to its scarcity. And another factor that gives it a lot of value is because of its capability to settle transactions cross-border. So the next question is, why is Bitcoin so volatile? Now, as investors, when you take a look at Bitcoin itself, you've seen how much it's gone up by the year. And last year it's gone down by quite a lot, also 40, 50, sometimes 60% swings in the span of a few months, right? So what makes this asset volatile? And the speakers say that, first of all, we have to understand that Bitcoin is still a relatively new asset. It got created in 2009. Well, it's probably a decade or so already. But compared to traditional assets like the US stock market, a few centuries, right? And other funds like exchange traded funds and mutual funds, they have existed for decades. And in that case, Bitcoin is still in its infancy and is prone to a lot of speculation. So if you take a look at the market cap of the US stock market is trillions of US dollars, whereas Bitcoin is still, I think, billions of dollars only. So it's a very small market size in relative terms to global markets, therefore very prone to speculation. But what we are seeing in recent trends is that the adoption is gradually increasing because Bitcoin's market cap is increasing every year as more and more people come in. Therefore, its volatility has also been reducing every year. If you take a look at the volatility 4 to 5 years ago, maybe there's like a 90 to 100% swing in less than a month. Right now, we are still quite volatile, but it's much less compared to last time. And another significant factor that drives up volatility is that Bitcoin has limited supply. Like what I said just now, it's limited issuance, 6.25 BTC, or half every 4 years, but significantly varying demand. Okay, so take a look at this chart over here. Okay, last year in 2022, we had a very, very bad crypto winter. That's when a lot of people exited the market, right? And that was due to in May, we had the Terra Luna death spiral. And then after that, in June, we had the Celsius crisis. Yeah, this crypto exchange collapsed. Then Bitcoin also fell by another 30 to 40%. And then in November, we had the FTX crisis, right? Sam Bankman-Fried, he was a fraud. The exchange collapsed. Bitcoin fell by another 20 to 30%. And you realize, right, that all of these events are external. Bitcoin's code has not changed, and this asset itself is very prone to external events. But more recently, it has started to pick back up again. Why? Again, because of external events. In March, we had this banking crisis. Okay, we also talked about it a long time ago. 2 to 3 US banks collapsed within a span of like, I think, 2 weeks or so. And then investors, they start to wonder, what alternative asset can we hold in order to store or protect our wealth? So obviously the first choice is gold. So within this time frame, gold also went up by quite a significant amount. But investors are looking at other assets such as Bitcoin because Bitcoin is decentralized, it's a settlement network, it cannot be altered. And so therefore, Bitcoin experienced quite a bit of jump during this period as well. And more recently, why has it suddenly surged 40 to 50% again? Well, that's because the US SEC is rumored to approve a Bitcoin spot ETF either this year, by the end of this year, or early next year. So if this is green lighted, if this is approved, then that will significantly drive the adoption of Bitcoin, will bring a new wave of investments in whether retail or institutional. So all in all, you'll be able to see that this cryptocurrency itself is very, very prone to external factors and whatever is happening to the general market right now. And perhaps the next question that you might have is that how can I position myself in such a volatile asset? How can we maximize our gains and minimize our losses, right, so that we don't get burned too much? Okay. So the speaker said that position sizing matters. As a low risk investor, a 1 to 3% allocation is more than enough. And in fact, this very slight allocation to Bitcoin in itself, you may think that, hey, it actually increases the risk of my overall portfolio, it makes my portfolio more volatile. But quite the contrary, Han said that with a small allocation, your volatility within the portfolio will actually decrease and it will also reduce the risk of your overall investments. Okay, because Bitcoin in itself is negatively correlated to other assets. If you take a look at Bitcoin's recent trends, it has been moving kind of like in its own path away from other markets. So therefore, if you have this sort of asset which is highly volatile and negatively correlated to markets, it can actually be beneficial to your overall portfolio. But long story short, if you're a low risk investor, 1 to 3% is more than enough. If you're a high risk investor, 7 to 9% allocation is also more than enough. You don't want to allocate too much. Let's say you went like 30, 40, or 50% into Bitcoin, then definitely you will suffer during this period. Okay, when Bitcoin falls like easily 77 to 80%. Okay, which is why position sizing really matters. And for those of you guys who are in the audience and asking, hey, but Bitcoin has rallied by 138% since January, it's up by another 40% in the last few months. I don't know whether I should buy it or not. If I'm buying it right now, is it considered FOMO? But I also asked this to the speakers, and they said that there is no right time to buy Bitcoin or any asset in particular. Okay, so stop trying to speculate in the markets and start allocating. And when we talk about allocation, right? So one of the strategy is to dollar cost average. I also talked about this previously quite a few times. If you're afraid to time the market, then just enter the market once every month or once every week, regardless of the price, okay? And at the end of the day, you would smoothen out your volatility and kind of like acquire the average price. The other alternative is position sizing, right? So like what I said just now, 1 to 3%. And give you a quick example. Let's say right now your goal is to allocate 3% of your portfolio into Bitcoin, right? And when Bitcoin rallies significantly, like what we've seen this year, the weightage of Bitcoin in your portfolio will definitely increase. Let's say it increased from 3% to 6%. So that is a very good signal to take some profits off your Bitcoin to reduce your overall exposure and bring it back down to your comfortable percentage of 3%. And let's say another scenario, right? Let's say in a bear market right now, your goal is to have 3%, but right now the weightage of Bitcoin in your portfolio has fallen to 1%. And that's also an indicator that you should acquire more Bitcoin in order to increase your exposure. So this is why once you have this specific percentage that you've determined, you no longer need to worry about what is the best time to acquire Bitcoin and whether am I FOMOing into it or not or whatsoever. So after this, we moved on over to EPF. Yeah, so these financial experts, they talked about the expected payouts from EPF, forecasted to range between 5.4 to 5.7%. So I decided to ask the speakers, hey, actually, when we invest in EPF, where exactly do our funds go to? Well, as of September, EPF's total assets stood at 1.092 trillion. Okay, and 37.7% of it was invested overseas. The remaining was invested domestically. So now when we talk about EPF's total investments, right, the majority of it goes to fixed income, 45%, and equities, 44%. Now, when we talk about equities in itself, right, let's take a look at EPF's holding in the Malaysian stock market. So as of 2021, EPF holds 146.4 billion, if you round it up, in Bursa, Malaysia. So this is quite a significant holding compared to its holding in the US market. Yeah, if you add these two figures together, the NYSE and NASDAQ, that adds up to be about 57 billion. So EPF's local allocation is almost 3 times more than its second largest position in the US stock market. And if you want to dive deeper into EPF's local equity portfolio, this one is good to know. A large part of it is invested in blue chip major banking stocks. Yeah, these include Maybank, Bank, CIMB, and RHB. These four already make up 32% of the 146 billion allocated in the Malaysian stock market. There's also a 6% allocated in Tenaga Nasional as well. So if you're ever wondering what gives these companies value apart from the services that they provide, well, EPF also owns a large chunk of shares in these companies. So the next question is, now that we know EPF's investment strategy, should we follow it or not? Some people may ask, hey, I see this chart already. Should I actually cater my investments towards these type of banking stocks or etc.? Right, so the speakers answered, for those people who are closer to retirement, why not just directly invest in EPF? Right? Because first of all, when you already approach the age of retirement, you can withdraw your funds anytime. So it kind of works like a flexible investment, except it returns 6% per year, which is really high. And why take the risk to invest in a particular stock, right? Because a particular stock may take a downturn and then you may face losses. So if you're closer to retirement, just directly invest in EPF, it will also have some tax relief. Next up, for younger people, you may want to opt for a higher risk portfolio. Now, this is because EPF's investments are, like I showed you guys just now, 44% equities, 45% fixed income. Yeah, this type of investment is a bit more conservative. Just a bit more about EPF. 2 days ago, I decided to voluntarily contribute to EPF, just 250 ringgit, part of my monthly voluntary contribution over here. And just FYI, any amount, any voluntary contribution will make a significant difference for your retirement. So, give you an example. Let's assume you're a fresh grad, you have a salary of 2,400 ringgit per month. Your mandatory EPF contributions will add up to 576 ringgit. Okay, so 11% is part of your own mandatory contribution, adds up to about 200 ringgit. 13% is from your employer, that adds up to be about 300 ringgit. And if you total this figure together, you will get 576 ringgit or 24% of your salary. So if you don't factor in salary increments, inflation, you will have about 460,000 ringgit in 30 years. But what if you voluntarily contributed 50 ringgit every month, which is honestly not a big sum. And within a similar time frame, right, you will have almost 500,000 ringgit, yeah, which is about 40,000 ringgit higher than your original sum over here. Plus, these voluntary contributions are eligible for tax relief up to 4,000 ringgit per year. So it's definitely a win-win. And right now, in addition to the initial 4,000 ringgit tax relief, right? Now, this one covers both voluntary and mandatory contributions, which if your salary is like 2004 or 2006, you're already eligible for this 4,000 ringgit tax relief. But on top of that, there is an additional 3,000 ringgit tax relief for voluntary contributions. You can see over here, right? Caruman Sukarela Tambahan KWSP. So this one is recently announced by EPF to encourage citizens to contribute more to their retirement savings. And if you're wondering whether this is the same compared to PRS, yeah, it's different. PRS is right here. Okay, so on the one hand, if let's say you're maximizing your PRS already, you may want to maximize your EPF voluntary contribution as well because there is an additional 3,000 ringgit of tax reliefs. Just a huge disclaimer for you guys, a huge warning. Rize is encountering a few major issues right now. There's a lot of complaints online, and if you're currently using it, just be careful, just use it at your own risk because some users, they've been unable to withdraw their funds out, and then some users also report that the payouts are not on time. They haven't received their payouts yet. So just make sure you use this app with care. And if you're currently registering for it, you may want to hold off that decision for a while, okay? Because they are encountering quite a few big issues right now, okay? So yeah, just a quick shout out to all our Patreon members. Thank you all so much for your support. Andrew, Wendy, Edward, Alex, CC Is, Urshad, Caveman Balls, Kelvin, Tommy, Jinkang, Adrian, JS Wenyan, Dean Duhan, Faris, Alan, Jackson, Raizan, Hudson G, Jeffrey, Lawrence, and Lukman, as well as all of our learner members. Is the RM8K SSPN tax relief applicable to single people or need to have kids? I think the answer is that it is only for kids. This income tax relief up to a maximum of 8,000 ringgit for deposits made by a person during the year of assessment into SSPN for his or her kid, reduced by any withdrawals during that year is provided. So I think that answers your question. I think you have to own a few kids, have to have a few kids so that you'll be able to be eligible for this relief in itself. Yeah. Thank you so much for joining. I will see you guys in the next one. Goodbye, guys. Good night. Stay safe.